The pace of hourly earnings growth cooling for workers at small businesses across the country. That's according to the latest data from Paychex and IHS Markit. The National Jobs Index also hitting its lowest level since July of 2021. Joining us right now is John Gibson, who is the CEO of Paychex. And John, first of all, welcome. Welcome to the show.
Thank you, Becky. It's great to be with you. Thanks for having me.
Yeah, a lot of years that we've been talking to Marty about these numbers, but we welcome you and we're glad to see you. Why don't you break out what this means? Because normally you hear of pay increases dropping. You would think that would be bad news for the economy and for the markets. But in a situation where the Fed is raising rates rapidly to try and cool inflation, maybe it provides a little bit of relief and means that they will take their foot off the brake.
Yeah, well, I tell you that the headlines in this report, I think, are very simple. Hourly earnings are cooling. We've seen it for the second month in a row. What you also see in there is people are working more. Matter of fact, it's at a 2-year high, the amount of hours people are working, which is pretty incredible. And then when you really look at that, what we're hearing is employers are trying to figure out how to get more out of the employees they got. And of course, with inflation, employees are working more to be able to bring home more in a weekly wage. And that's exactly what we're seeing in this data.
Yeah, I guess it would be interesting to know how much of one and how much of the other in a situation like this. Employees wanting to work more is one thing. Employers either wanting to stretch from the employees they have or not being able to find employees would tell a pretty different picture.
Yeah, look, I think it's still a very strong job market, is at least what we're seeing. It's very hard to find good workers. What we continue to see right now is employers trying to hoard workers or trying to retain and figure out ways to retain their workers. Across the overall employment area in small and medium-sized businesses, outside of other services and really leisure and hospitality, everyone's back to kind of their pre-pandemic employment levels, and really they're trying to hold on to that and then upgrade talent if they can. The other thing we track is how much are people paying to get people to switch jobs. And back in the early days of the Great Recession, we were seeing double-digit type of numbers. That's fallen down, too, into the single digits. So employers are less likely to be aggressive in trying to attract employees from other employers.
You said it's a different situation when you look at leisure and hospitality?
It is. So in leisure and hospitality, remember, leisure and hospitality and really other services, think of personal services, maintenance, repair, those type of things. Those are the two sectors that have yet to get their employment back to pre-pandemic levels. And in fact, in leisure and hospitality, which I think is still a little bit over 1 million jobs still lost in that area. So what's interesting when you look in the job index, actually other services, the wage inflation there is at 7.6%. Leisure and hospitality is at 6%. And that's really because those two sectors haven't fully recovered and they're having to pay more to attract people back into their industry.
We should maybe put this in context. Wage growth is slowing, but you're still talking about 5%. That's pretty strong.
Yeah, it is strong in historical terms. I would say when you look at the annualized, so we a couple numbers in here, and not to get too tech wonky, but we do an annualized monthly wage average, and that actually fell below 4%. So certainly what we would say is there's a trend line here, both in terms of the normal hourly rate and then the annualized rate that would indicate to us that there is a degree of cooling or moderation in the wages. So I do think some of the things the Fed is doing is having some impact on wage inflation.
The numbers you're looking at are a reflection of small and mid-sized businesses. Do you think the same trends hold true for large corporations?
Well, certainly I think there is a different dynamic in the large corporations. I think you hear, at least headline here, a lot more layoffs. We're certainly not seeing that in the small and mid-size. Again, the small and mid-size employers struggled the most to fill back their wage levels during COVID. As they've done that, what we really see is a behavior of trying to figure out how do they retain and upgrade when they can their employees.